Tuesday, April 25th. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm back in S. Roblox, Bank of America, Shopify. All those positions are small. And I did keep some of that Alibaba on this day 6 down, even though it's against me. We'll talk about it in a minute. Let's start by talking about these earnings reports. Let me scroll up here in the VTF and take a look at these numbers again. I'm going to start with Alphabet, even though Microsoft and Visa came out first. We have Texas Instruments hit too. Yeah, Google, this looks great to me, this report. This looks fantastic. Beat on revenue, beat on ad revenue, beat on YouTube ad revenue. This is obviously all versus expectations. And that's including, I think this is actually really important, it's including $2.6 billion in charges related to workforce cuts and office space. I mean, that's just creating further operational efficiency. So that means that those numbers are like even better, if you will. Revenue ex-TAC. I don't really know what ex-TAC means, but it's a beat. They may incur some additional charges. And then to the icing on the cake here, to buy back added shares up to $70 billion. So they're adding on an additional $70 billion in buybacks. That's massive. Is there any guidance on that, or are we waiting for the call for guidance? But so I mean that's really solid. I didn't keep Microsoft into the report. I kept Google into the report, and I sold a bunch of Google at about 109, and then I got filled just in front of 110, like 3 cents off the high, which was really nice. A little lucky to make up for the fact that I traded really badly today, which we can talk about in a second. Microsoft. So we got Google up. Google gave the measured move. The measured move is so awesome. Measured move was $5.50. It went 6 to highs basically, and that's from where we closed. So the measured move on that, just totally perfect on Google. Microsoft also trading up, not massive, but approaching that key 290 resistance. That's after they wrecked it today. So you know it's up like 2% or less than 2% now from where it closed yesterday. But they wrecked this thing down to $276. So it's up right now. It's up $11 here after the close. Microsoft personal computing beat, productivity revenue beat, intelligent cloud. This is an important one. Beat, revenue beat, EPS beat. I mean, solid beats too. Microsoft to provide earnings on the call. Okay, so that's earnings. Guidance on the call. Guidance on the call. It's going to be really important. Let's see what those numbers look like. But so far so good. What do we got Visa doing here? Visa also up ticking $4 or so after hours. You know, low key, we got to remember Visa's a really important company. It's a top 10 company in the S&P by market cap. I'm pretty sure by weighting. So it's a really important one. Visa beats on EPS, beats on revenue. Solid. Texas Instruments, part of the SMH, but you almost kind of forget about this one. Solid miss on EPS, beat on revenue. What's the guidance look like? Guidance is a miss. Yeah, not good. And then we have Enphase out. I don't really care as much about this one, but let's take a look. Enphase getting hit. Go down to support here. Bad guidance from Enphase. Yeah, not great. Not great guidance. Not great guidance. But and then we also have Chipotle. I mean, Chipotle is just the greatest company in the world. So usually I say Microsoft. But Google doesn't give guidance at all. Still, is that like a COVID thing that they started where they still don't do it? I dislike that. I think, anyway, now that we've kind of reviewed those major reports here, the Microsoft one's really important with that cloud beat, I think. We got to see what happens with the conference call. The Google ad revenue one is huge because all I've been hearing about is ad spend is down from a lot of different resources over the course of the first quarter of the year. So the fact that they were able to beat, and that's really important for a lot of other. It's going to be really important for a lot of other stocks out there. It's going to be really important for your Meta. Meta's trading up pretty decent here after hours. Closed above, it's up almost like $5 after hours right now, which is really, really impressive. So Meta is solid. Yeah, I'm surprised the Snap. That's the next thing I was typing up here. I'm surprised the Snap's not up a little bit more. It's up 15 cents after hours. I'm surprised it's not up more. The ad spend is huge. Cost of ads are going up. My wife's in advertising, so I get the scoop a little bit, and just a lot of complaints I've been hearing in the industry about ad spend being down in Q1. So these beats are really important. I was nervous about those numbers, and obviously this is Google. Google's the behemoth. If you're going to continue to spend somewhere, Google's probably going to be the main spot you're doing it. But all the same, this bodes pretty well for some of these other social media companies that really rely on that. It's even good for like an Amazon. Amazon trading up here after hours is a secondary off of Microsoft's cloud number and off of, low-key Amazon started to build out a pretty decent ad business as well. Yet Trade Desk should tick up on that also in sympathy. Okay, so let's continue to keep an eye on this. Google a little bit off highs, trading around 107.50 right now. High tick was 110. Had a great sale up there. Got a little bit lucky. I needed it because I am really unhappy with my trading. I'm probably more unhappy with my trading today than any other day I remember this year so far, to be totally honest. I did not trade well. I spent a lot of time in the morning meeting talking about the fact that this range in the market's about to break. And I basically said 50-50 up or down on that break. I might have then corrected myself to say 55% to the upside, 45% to the downside. But basically a coin flip here on which way the market is going to break out of this consolidation. And the fact that we're post OPEX and that they sold us down here in front of the earnings reports makes perfect logical sense to me. So here I am coming into today with a game plan on, focusing on this market break, and I did not execute it at all. I did not short the market on the break of support, which is exactly what I was planning on doing if we broke today. It was one of the more brutal days for the market that I feel like we've seen in a little while on kind of a technical breakdown. SPYs lost 410. They hardly took a pause at that 408 or 21 EMA area. Just a really, really weak day where we pretty much closed on lows, and obviously we're bouncing $1.40 here right now on these earnings reports, but we basically closed on lows on a complete and utter support break. The Qs held in a little bit better during the day. They broke last. IWM broke first. 313 was a big spot I was paying attention to there. They broke hard. They closed on lows. $3 a follow. You can see it tried to hold support here at that 313 at 1035. When your SPYs and your IWM are below it. That next test of it is when we actually broke down and had $3 of trend follow through on that. And then the IWM was the first, right? IWM was already weak because KRE was weak because of FRC. So this IWM, really 176 is the spot, but I was giving that a little bit of loose room to like 175, 175.50. But it basically was below that almost from the get-go, that area. We opened up just above 175.50. We kind of lost it. This was a great opportunity to short this first test of the 80 EMA here for the IWM at 10 a.m. That's also when we got this gross pivot in the SPYs after this negative Maribozu, and also the same exact candle basically at 10 a.m. across the board off of the IWM, shorting there for the market breakdown and expecting follow through. Whereas on a lot of these other days with the market, you were expecting chop. You're expecting that positive gamma to keep a bid under the market a little bit. You'd expect us to kind of round back up on new news or anything like that. Today, into this week, it just makes a lot more logical sense that we're going to break the range. And that's exactly what I tried to prepare myself for and prepare the team for on the break here so that we wouldn't be caught off guard. And then I totally blew it. I traded like garbage today. I had a big battle with Alibaba, which is a battle that I lost. Probably my worst intraday trade, if you don't include my little SVB mishap on the year, to be honest. And look, I planned on risking a lot in Alibaba today, and I lost a lot. So, you know, you have a game plan, you got a degree of conviction, you're coming in for a trade. I probably was a little bit too aggressive too early, if I could look back in hindsight and kind of grade how I executed. I was probably a little bit too aggressive too early, and then you know, I lost what I was kind of willing to lose on it, and I'm keeping a little bit of it overnight with the way that it rallied in the last hour and a half, and you know, I kind of had a core position that I bled down on this thing all day, and some other stock that I kind of traded and got out of and was trying to buy lower, and then kind of worked the position a little bit, but yeah, definitely. Was real brutal that I got so focused on this Alibaba that turned into one of my worst losses that I've had in a while, that I totally then blew and missed the technical breakdown of the market. So I'm not happy with my trading. Today is day 1, 2, 3, 4, 5. It's that day 6 down, really 8 red days in a row. So day 6 down here. You got big extension into support that was around this $85 to $86 area that we discussed. $90 is where the ADMA is, so getting pretty extended to the downside at this point. That's also part of the reason why I'm actually even keeping a little bit, is just this large degree of downside, coupled with the fact that it was able to bounce a dollar into the close in that last hour. But yeah, I mean, I just kind of went after this thing and got hit on it. I was spellbound, honestly, at just how terrible it was trading on a day 6 down, and the fact that lasted for an hour. Day 6 down, if they want to sell it hard in the beginning of the day on like panic sellers coming in that are finally throwing in the towel, that's not that unusual. But then with this type of volume, just even look like at the volume yesterday versus the volume today. When you got a day 6 to the downside and they're selling this thing like this on this volume, that looks like panic selling. That panic selling usually lasts for 15 to 30 minutes, and then that's it. Then very regularly you have a bottom after that. So again, I probably was aggressive too early. I could have done a better job waiting for more of a technical signal to actually hit. And I could just see in the tape that whoever the execution seller was just using an algorithm that was just on the offer, and it was actually very easy to read, and it was just brutal how they were selling this thing down on this, again, on this really, really big volume. Got me wondering at a certain point, and again, look at the first test of the ADMA is not till 10:45 a.m. That's like super rare, especially when you consider that it's like a day 6 to the downside. Having this degree of weakness on a day 6 to the downside, obviously the market itself didn't help, but the market has a lower correlation to Alibaba than it does to your typical American company. So yeah, I was just watching that algorithm, and I was spellbound by the degree of the selling. I was starting to wonder. We had that announcement back. I don't remember, somewhere here in earlier April, that SoftBank is going to be clearing out of all of their Chinese holdings, which includes, a big take in Alibaba. Whenever I see a headline like that, I assume that they've done most of their selling already, because it would not be the smartest thing in the world to announce if you're like, and I don't know exactly how many shares SoftBank has, or in what pecking order they are of highest shareholders of Alibaba, but they've certainly had a really big stake for a really long time. So whenever you see that announcement, I always assume that the majority of the selling is done by that point, though they did say that they weren't, that they were still doing it, because otherwise, why would you tip your hat, right? Why let the market know, hey everyone, I'm about to sell. 50 million shares of Alibaba, or I'm just making that number up, I have no idea what the stake is, and then let the entire market front run you, not create any bids, and create a lot of weakness. But then at a certain point, when I was watching that algorithmic selling in this thing today on this day 6 of the downside, I was like, am I fighting SoftBank here? Are they still liquidating their position? Is this entire 6-day move just been and obviously, you can look at the FXI, which has gotten obliterated over the course of the last 4 days as well, kind of coming down into some support. So there's been general China weakness. But yeah, I was a little bit spellbound. I just sold some Google. I was a little bit spellbound by that degree of selling. And then, I really try not to be like a conspiracy theorist when it comes to markets. It just kind of is what it is. But then right here, after all this selling comes in at 11:35, we get this headline about, the U.S. government, Senate or whatever is coming in and, saying that they're not allowed to do their cloud business in the United States. And then you get the crazy downtick on volume. And I don't know. We do know that the only people that are out there that are basically allowed to legally insider sell is the government, are members of the Senate. So, like Brant's kind of saying, some of that selling could have been coming from some of those people or whatever into this. But that selling was vicious early on in the day. And then you had that huge volume kind of coming on the noise, and you didn't, on the news. And you didn't get tremendous follow-through from there. You bounced up and ran right into those algorithmic sellers again on the moving averages, which was very similar to the price action from the first half of the day. And then finally got a little bit of a relief rally in the last hour or so. And now this is also upticking a little bit after hours on the Microsoft Google reports. But we'll see here. Day 6 to the downside. I did liquidate maybe a third or so of what I still had into the close, just because I needed to lighten up, because it was too much risk to keep the full position overnight. But I've got a decent sized position in this that I'm keeping, and I'm beholden to the fact, and I really don't like this, and I'm breaking some of my rules, to be honest. But I just think that the probability is high enough that I can do this. I'm beholden to the fact that these names have really big gaps now because of their Hong Kong listing. So this thing could gap down to $80 tomorrow, and I could be in a bad spot. It could gap up to $86 tomorrow, and I could be in a good spot. So definitely probably taking a little bit of a gamble, to be totally honest. But it's a gamble where I feel the probability based on the extension and the fact that it's a day 6 is on my side. So we'll see how that plays out. So, all in all, frustrated with myself because I didn't trade good. I didn't trade well. Had a specific game plan, gave a warning to everybody in the morning meeting about the market, that we could see a break in one direction or the other, this week, potentially starting today, and then did not pull the trigger on making any money on that at all. And then at the same time, was missing opportunities elsewhere because I was in a battle with Alibaba, just for it to be, one of the worser losses I've had on the calendar year so far. So we will see how it plays out. The trade kind of continues for me a little bit. Am getting saved here a little bit from a P&L perspective with the fact that I did have some Google into this report, and Google is up, $4 right now after hours, and as a secondary, consideration, I was able to sell a little bit of Amazon after hours here into 105, which moved as a little bit of a secondary, and I'd still like to see the Snap trading a little bit better. Was not able to sell any of that, at least not yet. But yeah, so that is all I got for you guys. So I'm realizing I'm probably echoing on YouTube because I never did the thing that I'm supposed to fix, which I just fixed. If anybody ever notices that, please let me know. Thanks, Varun. No one in the YouTube complaining about an echo, so maybe I'm not. I was good the whole time. Huh. Interesting. Interesting. Okay. That's all I got. I'm happy to answer any questions that you guys have. First, taking a look in the VTF, and for the moment, I'm not seeing anything. So let me go over to the YouTube. From Chi, Klonovich spoke on funds that increase long exposure when the VIX is decreasing. Yep, that's right. Those are volatility-based funds. Are these types of funds as big as CTA or hedge fund crowds? Well, I mean, a lot of them are running hedge funds. Basically, that's where some of it comes, where they have a specific strategy that is based off the volatility. Do they add selling pressure instantly as the VIX is starting to rally? No, not necessarily. It's usually based on like a 30, from my understanding, and I'm sure different funds have different rules for how their algorithms are built. But my understanding is that generally it's more of like a 30-day average. So as we're seeing here for the month of April, the volatility has now been so low for so long that volatility kind of average over the course of the last 30 days is decreasing, which adds a little bit more of an underlying technical bid to the market that comes from the vol control universe of algorithmic trading that's out there, which I don't know what that size is, but I know that it's big enough to be important. Robert O asking what's with Amazon after hours. Amazon's moving on the Microsoft Google earnings, probably more specifically Microsoft's cloud numbers. So Amazon's trading up on that as a secondary. Matthew's in with me on the Baba battle. Oof. Good luck to us. Sound is clear. Glad to hear it. What is your conceptual continuity? I have no idea what that means. I'm sorry. If you'd like to elaborate on the question a little bit further, then I am happy to try to answer. From Robert, do you have any topic on today's afternoon talk or just general talking? Do you mean the conversations with the pro trader thing? 'Cause that's tomorrow. By the way, I'm the host. I'm not the host. I'm the guest again for the third time. We gotta get some other people in there. I'm gonna talk to Greta about it, but I'm gonna be the guest for conversations with a pro trader tomorrow at I think 5 p.m. Eastern. So we'll do a quick morning meeting tomorrow, and then we'll tune over to that. I have no idea what she's going to be asking me. Sounds like she'll probably be asking me to rate my trading so far on the week. And the last 2 times I did it, I gave myself an A, because for the most part I think I've been trading great this year. But this will be fun. I'll be able to give myself a lower rating because of how bad I traded today. Back over into the VTF. From Kyle, I'm always here for a question. When you mentioned the IWM being a good short around 10 a.m., could you talk about how you would execute it? Like, as you see it starting to pop, no. Would you put your offer out versus highs, then add more if it starts to work? Sure. So everything starts with the big picture. The IWM is below support on the daily chart. That's the first thing that you want to know. Then you go over to the small picture. So what are my 2 favorite continuation trades? My 2 favorite continuation trades are, and usually when I describe this, I'm describing an uptrend, but it's just the opposite in a downtrend. So like a continuation hammer candlestick or an inside and up for trend continuation. And specifically, you want to look for that in the equilibrium area on the small time frame for your chart. Well, if you look at the IWM, we already know that it's starting to get below this support area, 175.50. It sells off very hard on the 9:45 a.m. bar, which what does that do? It makes it extended. So at the low at 9:45 a.m., you've got a decent amount of extension. This is not where I want to short. Yeah, this is not where I want to short. Markets that are extended can always become more extended, especially if there is heavy volume that's coming in or there's a news event. But eventually, any stock that's extended to the downside or the upside has to correct. There's 2 ways in which a correction can happen: time or price. Time means it goes sideways as the moving average catches up. Price means it bounces into those moving averages. Or oftentimes you get a combination of both, which is kind of what this is. You get a little bit of time here over the course of these 3-4 bars where this ADMA is able to move lower, but at the same time it's also price correcting up. The 10 a.m. bar is key because it's a shooting star candle. In this case specifically, I could call this a continuation shooting star, the opposite of a continuation hammer. So what does this mean? Well, let's think about what is a trend. The definition of a trend, let's just talk about downtrends right now because that's what this is a pattern of lower highs and lower lows. Most of the time, I think probably 75 to 80% of the time, when you're looking at a market on any given day, it is not a trend day, it's a range day. But that other 20 to 25% of the time, 1 in 4, 1 in 5, you do get a trend day. And as a general rule, trend days are going to be great for traders because you can follow that trend and you can get, you know, really good risk-reward opportunities for trend continuation. They tend to be the better, easier days as long as you're on the side of that trend and you're not fighting it. So, you know, a common question that I always get when you look at a market like the IWM here on the 5-minute that was more or less in a downtrend all day is, Derrick, how could I have participated in this? And again, one, you could have been looking at those daily chart levels and shorting versus them, or you look for the intraday execution. So one of my favorite intraday executions, to repeat myself, is that like continuation doji or an inside 5 and down. You actually got both here. But what does this mean? We have sellers in control, right? From the open until 9:45 a.m. Sellers are in control. The market goes down for the first 20 minutes. At 9:45 a.m., buyers take control. And the spot where buyers take control from sellers or sellers take control from buyers is what we call a pivot or an inflection point. So at 9:45 a.m. into this extension, buyers take control from sellers. Now, in a downtrend, and this is one of my favorite like trick questions to ask people is, you know, who's in control in a downtrend, buyers or sellers? And everyone always says sellers. And I go, it's not necessarily true. You've got, if it was just sellers, you wouldn't have a downtrend, you would just have a down. When you're looking at a downtrend, the answer is going to be both. You've got buyers and sellers fighting back and forth and taking control from one another at various points. The thing that makes it a downtrend is that sellers take control from buyers at continuously lower prices over time. So bigger picture, yes, sellers are in control. But very specifically at 9:45 a.m., buyers take control from sellers and buyers stay in control for the next 15 minutes. Now, typically, where will you look for sellers to regain control from buyers if there's going to be a downtrend day will be in that equilibrium area. So you get the extension from equilibrium, you get buyers that come in control because of that extension, either shorts are covering because they're making money and they get a good move, or buyers come in and they recognize this extension and they're trying to come in and, you know, put on a trade in the other way. Sellers stop selling in the same way because they already caught this big move and they don't want to chase price. For whatever reason, your buyers gain some control from sellers, they drive it back up into this ADMA. Now this is the area where if you think that you're going to get a downtrend day, and there's a good reason to think that because you're below support, that you want to begin to look for your signal to be able to short. The difficult thing is that you can't just short on the way up because, you know, first of all, the SPYs and the Qs aren't confirming the IWM yet. So maybe this is just a false breakdown in the IWM and you get right back up and the market's going to be fine. But two is that even if you're going to be right and that the downtrend's going to continue and that sellers are going to come in and they're going to regain control from those buyers and drive it lower, it's impossible to know exactly where that's going to happen, even if you can expect it's going to happen somewhere around equilibrium. It could happen in a really weak market in front of the ADMA without even actually touching it, a la BABA today. It could happen where it just kind of barely touches the ADMA. It could happen somewhere in the space between the 8 and 21 EMA. It could happen at the 21 EMA. It could even pierce the 21 EMA and then continue. Generally, you don't want to see the last pivot high break, which in this case is the opening high. And generally, we know that, you know, at this time of the day when it's still 10 a.m., respecting an ADMA on the 5-minute chart is going to be very normal. But it doesn't mean that it can't overshoot it. So I don't want to just short on the way up. I guess you could a little bit if you just want to use the high of the day as your stop loss, but it's a little bit tricky. I really want the signal to come in. The signal is going to be my execution signal when the big picture is already telling me potentially lower to then come in and actually short. And then again, what is the signal, right? I don't want to be shorting on the way up because I don't know where the pivot's going to occur. I want to be shorting after I have a signal that is showing me I have sellers regaining control from buyers. Well, what is that? A doji candle, an upside tail, a shooting star, or Another one that I like is an inside 5 and down, especially like, let's say that this 10 a.m. candle closes a nice green candle, close on highs. Your next candle is an inside bar. How do we know that Maribozus can get negated? Is through an inside candle. It's one of the ways, right? So you get this positive green Maribozu followed by an inside 5, and then the inside 5 breaks down, and then you get continuation that way. Or in this case, this is actually super ideal. It's both. They gave you the upside tail into the ADMA, and then they followed it with an inside 5 that broke down. So how am I going to execute this? I'm going to wait for this candle to close at 10 a.m. And then when I see that it closes and I've got a shooting star and I can reasonably assume that this could be the pivot high for trend continuation, then I try to short somewhere technically after it closed. Sometimes I'll cheat a little bit and try to do it before the close. I can short versus that high. I can short versus that high, and I can look for a continuation. And the way to do that, I prefer to try to go on the offer when I can, which we talked about the other day, though there's no guarantee that you're going to get stock. But this isn't really a momentum trade here. So usually there's going to be enough backing and filling where you'll be able to get filled on the offer. And then, I mean, here you get a whole another 5 minutes of backing and filling, which actually forms an inside 5, which could be a whole other thing that you could actually have used to execute the short. So you almost have like a double opportunity to be able to short, confirmation based on the daily chart, ADMA caught up, so right into equilibrium. I mean, it's really perfect technically for intraday short execution. The only thing that I would argue that was against it is that the SPYs are still trying to hold above really key 410 support, and the Qs at that point are still above 313 support. So I don't have market continuity, market confirmation, but you know, pretty much perfect if you're specifically looking at the IWM. So I hope that helps with your question there, Kyle. Next from Dave. What do you think about the sympathy play to FRC like LNC that held support today? So as a secondary play to the downside, looking to rotate out of XLF winner. I've been swinging, but still have bank exposure. So in my mind, you've got two different worlds in banking right now. You've got these regional banks, which are a scary spot to be involved in my opinion. And maybe it's just because I really touched that stove and burnt myself in a pretty big way with SVB. They should have halted that dang FRC and screwed everyone on that one too, right? But they didn't. They let you trade out of it if you wanted to today. Yeah, I mean, I'm afraid of any regional bank. I won't touch it for more than maybe like a 2-minute scalp, and even that I don't even want to touch after my SVB situation. So I don't like it. I think it's a tale of two cities as far as regional banks versus big banks. Look at the earnings reports on these regionals versus look at the earnings report on JP Morgan. I mean, it's just night and day. So I get it. You made good money, you know, in your XLF situation. I did pretty well with them as well. I did really well at JP Morgan, Bank of America. I fully liquidated those positions. I just want to get back in on them on dips. And I actually had in my game plan today to begin to rebuy JP Morgan around 139. I decided to pull away from that and just be a little bit more patient. And I did reinitiate a little bit of Bank of America into this key 29 support zone, which I'm keeping overnight. But I would rather, you know, I got out of Bank of America at 31.25 after hours on the earnings day. I'm rebuying that stock as it's approaching 29. I'm really confident in these big banks. They're the ones I want to be in. The small banks are frightening to me. So I would much rather buy the dip in the better companies than you know, try to rotate out of those better companies and get involved in some of these regionals. And I know nothing about LNC as a bank. From Ben, was looking at FISV before the open, and it already triggered my alert for 118. So when the market opened, nothing alerted me to the movement, and I missed the trade. Any advice for catching those early moves on the open? Well, I mean, first of all, I would say that if your alert already triggered, it should be on your radar, or you should be putting a new alert out. And I understand at that point maybe it's above 118, but maybe you're like, hey, you know, if it's above 118 and that's your play, then you should almost be looking at it right at the open for your execution, or you're not because it went up too much. And you're like, oh, wow, it's at 122, just making up a number. I don't know where it was. It's at 122, I want stock at 118. I'm not chasing this. But you know what? I'm going to throw some alerts out on the downside in case it retraces early where I'm interested in taking a look at it. So let me throw an alert out at 118.50, 119, whatever it is. And let me see. I just sold some S, which is upticking as a secondary play here. Yeah. So I would just make sure that you have other alerts in, that you're prepared to type it up, or otherwise, I mean, look, sometimes things just fall off the radar. It happens. It happens to me a lot. I've got a trade, a game plan at pre-market, but I've got 15 other trades that I game plan pre-market that I'm interested in, and one of them just kind of falls by the wayside as it's not on my radar anymore. Thanks for the question, Ben. From Mike L. I was without internet from 9 to 11:30. I called the trade desk around 9:40 and wanted to put in some stop orders. Yeah, they only do, they tend to only do like market buy, market sell. A lot of times they won't even do limit orders. It's really just supposed to be for liquidation because you had a problem. So I just reduced my size in my position down to 100 shares each because I could not deal without stops. Spectrum and ETA 12 o'clock to restore service. How would you handle that situation? The way I handle that situation is I have an app on my phone that gives me real-time stock quotes, and I know where I want to liquidate the position, and I stare at my phone and watch where those prices are, and if any of them get to where that stop loss is, I immediately call a trade support and ask them to liquidate the position for me. That's what I do. From Varun, where's resistance to Microsoft? 290 is a big level. 290 is a big level. Let's take a look at some of the after hours action here. Yeah, 290 is a big level. Uptick high was 291.30 on the initial bar. It looks like so it's roughly holding that 290 as resistance. Just there was some momentum there. It's building on a wedge on the 5-minute right now with a high of 289.13. So 290 is really key for Microsoft that we can pay attention to for tomorrow. Google. Yeah, Google's got some daily resistance around this like 108 to 109 area. And this thing upticked to 110 after hours. But after that quick uptick, it's kind of been building out a little bit of a consolidation wedge type pattern around 108. So you're right into resistance where this is building out on Google. And Google was back up here in February when it last reported. I think this was the last report on February 2nd. So here we are at the end of April. It's kind of retesting that resistance. I remember thinking back here in the last quarter that the Google report wasn't great, but the reaction was great, and then they, 4 days later, eventually sold this thing all the way back down. This report feels a lot more solid to me, but I'd love to see guidance. I guess they don't give guidance? I don't remember that. Resistance on the SPYs and the Qs. The breakdown spots now are key. So I would say like this, 408 is going to be a level, and then 410 is going to be a level for SPYs that you got to pay attention to, and Qs 313. We really want to see if the levels that we broke down from today act as resistance tomorrow. Thanks, Noah. Thoughts on fading a bounce tomorrow morning into where support broke today? Yeah, so that's exactly what I was just kind of leaning towards. Those are the key areas to watch. So, yeah, you could look for a short in the Qs at verse 313. The SPYs are a little sloppier. I don't know if the 408 is the level, 410 is the level, but yeah, somewhere to that 408 area. You could start to look to fade it. I'm just trying to think. I mean, it's just really, these are two really interesting reports. You know, I had a concern just with the move that the Qs have had. This is generally how markets work, and I remember when Scott Ruther did his conversations with a pro trader, he articulated it really well. Something that I've also seen over the course of years is that where the market trades into these reports has a big effect on how the stock trades after the report. So if you've had a really big up move into a report, good can oftentimes be not good enough. You can have a nice little beat or whatever, a little beat, and then the stock, you know, sells off on it because they ran that stock so much into the report. The opposite's true also. You know, if expectations are really low, if they've heavily sold the market into it, then you know, it's easier usually to get that bounce. So my concern coming into big tech earnings is that the Qs have performed so well. I mean, even this consolidation over the course of the month of April, you know, we're up a lot on the year for the Qs. Granted, we came from a pretty low spot, low end of the range it's been going on for the last year, but we're up a lot on the year. It's been a pretty big move into it. It's been a pretty big move, you know, specifically for some of these names. Microsoft started the year at like 240. You know, it's up $50 from that into this report. So it's going to be really interesting, actually, how the market trades off of this. Because on the one hand, you could make an argument that these reports look so good and that Google ad spend stuff has far-reaching effects to other companies, that this could be the catalyst that gets us right back into that range. The other perspective that you could take, and I really don't know which one is right, is, yeah, you know, these reports are great. They're solid. There's no doubt about it. But the NASDAQ's had such a big move into these reports. These names have had such big moves into the reports. It's going to be tough for these things to really break out. It's going to be tough for major levels to be reclaimed by the market. So I don't know. I genuinely don't know. I want to have a bullish lean. Specifically, I mean, two of the most important things in the entire marketplace right now are cloud and advertising. And we just saw a solid cloud number and a solid advertising number. So it makes me want to be optimistic, but while we're below the levels, you're probably better off shorting versus them, or what you're saying here, fading into them, and then just having your stop losses out and being mentally flexible just in case, you know, this cloud number and this ad spend number is enough to really wake the market up and enable it to recapture those levels. So I like your thought process for an initial trade there, as long as you're willing to stay flexible with it and kind of manage the risk. From Rex, basically every long trade today turns out to fail with the heavy market sell-off. Absolutely. I tried a couple of extension trades today. They were not easy, and most of them failed due to market conditions. Although the market intraday was downtrending this morning, IWM was certainly below support, but its buys and Qs were still staying above it, staying above equilibrium before 1 p.m. Yeah, I mean, the SPYs really lost it at 10:10 and tried to tick above and failed at like 11:15. The Qs held in much later off that 313 number. They didn't really break down until like 11:50. And then the big thing was also, before I read the rest of your question, and I alluded to this at a certain point. You know, it was one thing here when the SPYs tick below 410, and then they give this inside 5. You easily could have false breaks occur all the time in markets, right? It's one of the things that makes market trading difficult. You easily could have the SPYs break this 400, you know, with this volume that kind of increased on it, the stops that are triggering. Then you get an inside 5. The inside 5 and up comes in. You get back above 410. You negate this candle. The SPYs are back above 410. Qs are still above 313. And the IWM is holding in a little bit better. And maybe you're getting a relative strength flip and the market gets saved. That could still happen. The problem, and I pointed this out when I was still on the radio, was by the time we hit 1025 and then definitely, 10:30 when we started to break down further, that hadn't happened. It wasn't just like, all right, we're below the level, 5 minutes below the level, pattern comes in that gets you back above the level, they shook everybody out, and we can stay in our range. It was, all right, we're below the level, the market's trying here, but we're staying here. And I say it a lot, it's important, especially when you think about like how false breakouts and false breakdowns occur. And it makes execution sometimes a little bit difficult because you have to anticipate what's going to happen a little bit more. But it's never enough just to tick above or below a major level. You have to hold above or below the major level. And that's really what was happening in this market by like 10, 20 or so. And I said it out loud in the VTF. It was like, oh, this is not good. We're holding below. We didn't snap right above. So, and I know that eventually we did try to recapture that level, and that was just like a false recapturing of it, basically, that then broke down. So if this messed you up a little bit around 11:20, I could understand that. But we never recaptured any major pivots. So this was just the next lower high in the downtrend for the SPYs. Yeah, and that was what I was, and I'm reading the rest of your question where you're saying, I was thinking that we wouldn't have a lot of room to the downside, which is a huge problem for you to have that kind of bias. That's what I was specifically trying to get across in the morning meeting today, was that we have finally hit the point in a month-long consolidation where we are set up to really break this consolidation. And when that consolidation breaks, it's probably going to give real follow-through. And that's what happened today. We broke, and we had very real follow-through off of that. So, this Bob is rallying after hours a little bit. It's annoying me. Yeah, we just had fantastic follow-through to the downside from the market, which is exactly what I was trying to get everybody to expect today. You tried Tesla along around 10:15, so Tesla was relatively strong today. I don't consider this an ignition bar because it's not a breakout, but gets back above 161. Took a small size on the long, put your stop below the low of the 10:15 candle. Oh, that held, huh? Sold everything at the top in the same candle near 162. So, you're just kind of describing a scalp here. You got relative strength, you got stock holding above 160, you have the volume picking up, you scalped it. It's fine. I don't love the trade. I don't really consider it an ignition bar. You got the relative strength there, but there's nothing daily that's important that's occurring. I guess the fact that it's back above 160 is important, and you're buying this little intraday breaker resistance. I think it's okay. I think it's just a little day trade scalp that you put on, and I'm glad you made a few bucks in it. Next from Jackie, can you talk a bit more about the significance of buybacks in big tech firms and what that could mean? Sure. Sorry, I just got filled on the bid in Google around 107, and I just sold some. Can you talk a bit more about the significance of buybacks in big tech firms and what that could mean to the overall market? If we see consistent buybacks in large cap companies, would that suggest that there is room higher for the market, and that dips in stocks with strong buybacks are good long-term buying opportunities? Yeah, the historical statistics certainly show it. You get a very, very significant premium on your return on a stock if they have consistent buybacks that have been occurring throughout that period of time. The data is just kind of undeniable, but that doesn't mean that markets can't go down. Apple has been buying back. Brant pulled this statistic the other day. Apple has been buying back about $20 billion worth of stock per quarter, but that certainly didn't stop it from from like March 30th through June 17th. So over the course of a few months here, it certainly didn't stop the stock from going from 180 to 130. That's a big pullback, and this was one of the better ones. It's also one of the biggest buybacks. So Yeah, buybacks. The market loves buybacks. It's gonna, a buyback announcement will generally help the stock move up. I love buybacks. I love being long a company that's buying back its stock. You can feel confident that that company is at certain points in time going to literally be on the bid, supporting your trade, giving you potentially a higher probability of success on that trade if they're literally buying the stock up as the day that you were involved in it. What the buyback is versus the market cap of the stock, and how much of their float they're buying back are important numbers to pay attention to. And yeah, generally it leads to a long and consistent bid when you've got market cap weighted indices where the biggest stock that's in them is buying back $20 billion of stock per quarter. I mean, it makes it difficult to be a perma bear. I find it to be almost impossible to be a perma bear unless you're actually betting on nuclear warfare or the end of times, and in which case your money is not going to be worth anything anyway. But that's all very, very big picture stuff. So yeah, certainly important, certainly something we want to pay attention to. There was some data in Pat's note this morning about the pace of buybacks so far here in 2023. Apparently last week was a really big week for buybacks, and it's interesting because there was a lot of calls for buybacks to really slow down in 2023 as companies brace for a recession or whatever it is. And so far the data hasn't shown that. Companies are firing their employees and spending the money on buybacks, which I guess you could be upset if you're the employee, but not as a shareholder. So, hope that helps. Cool. Looks like we got through everything just after 5. We got the conference call from Microsoft. It's going to be happening in a little bit. I hope everybody had a decent day today. I hope you all traded better than I did. Apologies for not doing a better job communicating to you guys on shorting the market better, and I hope no one got too hurt if you battled Alibaba a little bit with me today. I hope my P&L is the worst of anyone on the team for that name. So we'll see tomorrow. We're looking at a gap up tomorrow. It's going to be interesting to see what this market's able to do as far as retesting levels. So have a great night, everybody.